Hello, everybody, and thanks again for tuning in. Again, I am a licensed CPA with just shy of 2 decades of experience. The things that I present in my videos are things that I've run into and things that I've encountered throughout my years of experience, as well as specific tax laws that are as posted by the IRS. So today I wanted to talk about filing your tax return with your pay stub. I've received a lot of questions over the past couple of days in regards to whether or not this is possible. Can somebody file their tax return with their pay stub? And the answer is this ideal? The answer is no. However, if you are careful and you do follow this video step by step, you can file your tax return with your pay stub. But again, just be cautioned that you may have to amend and or you may receive an IRS notice. So again, if you do file your tax return with your pay stub, you do just want to make sure that you go back and you compare your actual W-2 when you receive it. So just to keep everybody up to date, I think as I projected in the prior video, the IRS has announced that they are opening the e-file system on January 27th. That is 1/27. That is a week from Monday. And it is actually a Monday, so the last Monday of the month. So let's kind of get into it and let's kind of talk about some of the components that you need. So some prerequisites here. The first item that you definitely need, and if you do not have this item, this will not work for you. So you can stop listening to the video if you don't have it. So again, you will need your employer's EIN number, which is also known as, per the W-2, is known as the Fed ID number. So if you do not have that number, you will not be able to file you will not be able to file your taxes. Now you can try to contact the employer. You can try to look on your pay stub to see if it's there, but typically they do not post that number on your pay stub. So again, if this is a new job in tax year 2024, you may not be able to do it. So if you want to still put the information in order to see what your refund is, you by all means can do that as well. So that's kind of really step number one. So you kind of want to make sure that you have that. All right, so step number two is which pay stub should we be using in order to file our return? So again, I have an example pay stub that you're looking at on your screen here. And the answer here is your last payment of the year. So in this particular case, in this example, we have two dates. We have a period, beginning and end date. So this line right here, we're not really concerned about. This really is your pay date, what the pay period is, but the IRS doesn't care what your pay period is. What the IRS cares about is cash basis. So basically that means when you get paid. So your last physical pay day of the year. So meaning if your payday was, looking at a calendar, if your payday was say on the 27th, which is the last Friday of the year, you would pick that up. However, your payday was 1/3, where you actually got the money deposited into your account, you would pick up the prior pay period of 1/20. So that would be your technical last pay period. Okay, so now once you have your absolute final last pay stub, you can go now take a look at it. So in this particular case, there's a couple boxes. So we're going to kind of skim down to here. So here's your earning box here. So in this particular case, this person has regular pay, bonus, mid-year and year-end bonus, and then they have a total gross pay. There's pre-tax deductions as well as post-tax deductions. And then here's total taxes. And then in this case, there's a match, which again, we're not necessarily compare that. And then it comes down to your net pay. Once again, we're not concerned. So the main boxes that we're concerned with is going to be your earnings box, which is your gross pay, your pre-tax deduction box, and your taxes box. So what we're going to do here is we're going to start with calculating. We're going to go down the line in a W-2. So assuming, this is a repeat employer and you're utilizing similar tax software, or if you don't have the same tax software, you should be able to go back and take a look at the EIN number from the prior year or from your prior year's W-2. And then you'll put that in box B of the particular tax software or looking at a W-2. And then again, your social security number, which would go in box A. So now skipping down to box 1, which is wages, tips, and other comp. So the way we want to calculate this is you cannot just take the 173,696. You have to take this number less pre-tax deductions. So again, pulling up a calculator here, in this particular case, we would take 173,696 and we would minus 4217. That gets us 169,479. That amount will go in box 1 of the input of your tax software. And then total withholdings for federal taxes is just this number over here, which is $32,680. That would go in box 2 as your federal withholdings. Box 3. Now this box is a little bit more complicated as your pre-tax deductions do not play a role. They are not deducted from your FICA wages, which is Social Security and Medicare. So this person is a higher income individual, and they've actually exceeded the threshold for Social Security earnings and taxation for year 2024. So the max amount for 2024 is $168,600. So even though it says 173 here, they weren't taxed in the 173. You're only taxed up to 168,600. So you'd put 168,600 into box 3, and then you would put your year-to-date OASDI. And then again, if we want to check this theory, I know what the Social Security tax rate is, which is 6.2%. So we could take the Social Security and go 10,453 and divide it by what I said was the 168,600. And we're at 6.19999. So that's right, 6.2%. So you know you're right. The next item is going to be your Medicare wages, which is box 5 on the W-2. So that you could just take this number. So you would take 173,696, and that would go in there. And then again, you would take your Medicare tax, which is 2492, which that would go in box 6. So again, similar to Social Security, to check this, you can go 2493, I round, 2493, divide by the 173. 696. Now this rate should be 1.45%. So if we did it right, and it pretty much came right out. I mean, it's off by less than a fraction of a percent. Again, it's probably due to doing rounding of the wages and whatnot and so forth. So I would say that's safe, and you can put that in. Now, kind of skipping down, going down below. So now if you did have any pre-tax deductions where it said in here, like FSA, dependent care benefits, you would want to put your year-to-date in box 10. If you don't, then you don't have to worry about box 10. Non-qualified plans is not typical, so you can ignore that. That's box 11, so going to box 12. So now box 12, in this particular case, they got two particular items. They have a retirement plan contribution of $2,446.96, so that would go on box 12 as a code D. Again, that's what we reduced our total amount in box 1 by, and then you would have a section 125 plan reduction of, that wouldn't go anywhere, so you would be good with that because that's just insurance contributions, so you don't have to worry about that. Box 14, again a little bit less required, but you can go on ahead and put the 161 in there for individual disability insurance if you wanted to, but again, not super important. The last area that I wanted to discuss, again, is you want to make sure that you get your state wages right. Majority of the states follow federal, so again, you'd have to follow your particular state. I could tell you if you live in the state of New Jersey and you have a pre-tax retirement contribution, so that's this amount here. State of New Jersey handles that a little bit differently. There's also other states that have required paid family leave or disability insurance contributions, like the state of California. I believe the state of Rhode Island has it, as well as insurance mandates. So all things that you got to consider depending upon your specific state. You just want to make sure that you properly report and record that. But the next important component is your state tax withheld. If you do live in a state that taxes are withheld, I would, to be on the safe side, just put down whatever you had in box 1. So in this particular situation was the 173,697 minus 4217, and that would go in your box 1, your box 16, which would be state wages and tips, and then your state income tax withheld would be box 17, which would be this amount here, 9522. And then that's pretty much it. And then there, you should be able to go do a recalc of your tax return if you're doing it on a software, and see what your refund's going to be. And then from there, I would just wait. Again, we got about 10 days to go, a little bit more than 10 days, about a week and a half to go before the IRS opens. And I'd wait and see if you get it. Chances are you'll probably get your pay stub prior to the IRS opening. And then when you do, all you got to do is just simply compare it to what you've already put in. If there's some missing boxes or missing things that were marked on your W-2 that we didn't pick up here just because it was missed or just wasn't super clear, you can go back and fix it. But just like I said, don't hit the file button until you receive it. If for whatever reason you don't get it and it doesn't look like you're getting it and you don't want to wait, then you can hit the file button, but again, just be cautious that know that you may get a notice and you may have to amend your return. So as long as you're okay with that, then you're good. And then the other component is just know that a lot of professionals will not file returns based off your pay stub. They will not do it. If you go to like any of the national prep services, I believe that majority of them will not do it, especially the ones that are online, the ones that we always see commercials and ads for. They typically will not do it. They require your actual W-2 in order to do it. So again, just kind of keep that in mind. Hopefully this video was found helpful. If you did find it helpful, please like and subscribe and share.